Hello Maverick traders and welcome to today's currency recap. It is Thursday, May 25th. Well, what an exciting day due to NVIDIA in large part. Huge gap up in NVIDIA based on blowout forecasts and projections. Incredibly optimistic. What do valuations and multiples even mean? Also very strong rally in tech. If you want the ironic piece of news for the day, I just learned that Cathie Wood dumped her position in her flagship fund in NVIDIA before the stock kicked off like a $560 billion rally, which that's rough if you're poor old Cathie. Debt ceiling talks, obviously that's going to come back into the picture. Wasn't all that much of a factor today. Taking a look now at the S&P 500, we're still floating along this trend line that we've been kind of floating against for weeks now, going back to early April. We found support and then traded upwards. We're still above, both moving averages. This looks pretty good for the market, I must say. I still like my upside target of 43.02 to 43.25. To be met. So we'll see if we get there over the next several trading sessions, or it might realistically even take a few weeks. Taking a look at the 10-year yield, we're close to breaking out the upper boundary line of this falling wedge, bull flag, whatever you want to call it. There is going to be stiff resistance at 3.9%, however, so I'd be pretty surprised if the yield just breaks out on its first try. My hunch is that we're going to pull back once we reach that trend line, and then we're going to take another run at it. And finally, we've got crypto here trading in this bull flag. We're likely to break out the top of this bull flag once the corrective sequence is over. So when that is going to happen, I don't know. Right now, I don't think it's the time to buy back into crypto. I really would want to see some more strength. But yeah, what I'm looking for is a break out the top of this corrective trend channel. Now, in terms of the market outlook, we're above, my apologies, this should be a +2. We're above both moving averages, but the slope is fairly neutral. Now, in terms of the news calendar, tomorrow we have core PCE coming in at 8:30 a.m. Could definitely be a market mover if we see a big miss in that inflationary report. Remember, this is the inflation report that the Fed pays attention to. That's why it's so important. Okay, moving on now into some currency analysis. Cryptos was a fairly muted day, given the volatility that we had yesterday. It's no surprise to see that things have contracted and quieted down a little bit today. Litecoin down almost 1%, but everything else is more or less holding steady. Over on the fiat side of things, this is what's really interesting. The Kiwi dollar continues to suffer as the RBNZ has now said that they don't really see any more rate hikes in the future. And the currency's gotten slammed as a result. And given its geographical proximity, we're seeing a somewhat similar but more muted effect in the Aussie dollar. And pretty much everything else other than the yen did pretty well today. The dollar maintains its bid. The Swissy was strong as well. Now, in terms of velocity, this is where things get fascinating. We have some clear currencies on the lower end of the velocity spectrum, and then we definitely have some currencies on the higher end of that velocity spectrum. So I do think that there are some plays to be made here in the near term. And that brings us to some possible trades. So let's hop over to TradingView and take a look. We'll kick things off with the yen. So no change to the yen forecast. I said this last week. A great sell signal is when you have a failed buy signal, and that's kind of what we've got in here. So I'm expecting the yen to break below its October 2022 low. So I'm definitely looking to be short yen. Dollar, I've been calling the top of this wedge now for a while as a good preliminary target, but I think it's likely that we see a measured move, which would take the dollar index up to 120. Sorry, not the dollar index, this dollar basket that we're looking at, which would bring us to 125 or 126. So I do think there's more upside in the dollar, but as we get close to this previous top, there is likely going to be some dollar sellers up there. We might see the buck pull back a little bit. Okay, Swissy, we found support off this prior swing high. And looks like a nice little bull pullback. could be breaking out again to the upside here in the Swissy. The euro, well, we found support in this shaded area, and the rally has been a little bit fierce, but I'm not too convinced. What we would need to see here, I think, however, is one little pullback followed by one more new little high, at which point I'll be very cautious about the euro, and I might be looking to sell it instead. So I think in the short term, there is some runway to be bullish the euro, but it's not my favorite trade. I much prefer the Swissy and the dollar as asset currencies. The pound is somewhat neutral. So I highlighted this broken trend line, and look what happened now. We're now trading back against this broken support line, but treating it as resistance instead. It's kind of do or die time for the pound. If we can't climb back above this trend line, then I think we're going to test this lower zone here, which lines up with the April 14th lows. So there could be a big move down in the pound if we fail against this trend line. From a trading perspective, I hope that's exactly what happens, because I think the downside risk in the pound is going to get very interesting in that case. Canadian dollar, I said that we would likely break out the top of this long-standing range, and that's exactly what's happened. It would be great if we could get a little bit of a sideways base here, followed by another pop higher for some follow through. Okay, now we're getting into some interesting liability currencies. I said that the first sign of an Aussie recovery would be a break above this trend line. Well, we did get the break above the trend line, but just no upwards momentum. I'm not ready to call this a failed setup to go long yet, but if we break this support, then I think we're gonna test this swing low from December 2021. So I do think there is some room here to short the Aussie, but the New Zealand dollar is even more interesting. Now, it's definitely oversold at this point. We've had such a big move. I do think that Kiwi is due for a bounce. But after we get that bounce, likely back into this resistance zone here, which could be a considerable bounce on the crosses, I do think it's going to set us up for another big move to test the lows from end of April. So if you're very aggressive in short term, I think there could be leeway to trade the Kiwi on a bounce. Not my trade. I'm going to wait for the bounce to resolve and then look to short the currency instead. So I definitely think there is some action right now that's happening in the Forex markets. So there is some volatility to take advantage of. But that volatility seems to ebb and flow very quickly. So given that, I'm going to stick with what we've been saying, which is remain hyper-focused on velocity scores for any trades and always focus on proper position sizing, because candlesticks look the same regardless of whether volatility is high or low. But when volatility is elevated, what you see in one candlestick, like you could easily get 100 pips in 15, 25, 30 minutes. Whereas in a low vol period, maybe you'll get a fraction of that in the same time. So just keep that in mind when it comes to volatility in the Forex market. And that's why we should also be extremely focused on relative strength and weakness and those velocity scores as well. All right, so that's it for me, traders. Not really too much else to close out the week other than that PCE report tomorrow morning. So just pay attention to that, especially if you're trading the dollar. All right, traders, see you next week.